Okay, so we're live now. Hi, everyone. Welcome to the FinTech and Healthcare panel. Really great to meet everyone. I would just like to introduce myself. My name is Barbara Yai. I'm the founding partner and CEO of Unicorn Growth Capital, which is a strategic FinTech fund. I'm excited about this panel because my whole thesis is around how FinTech is everywhere and enables and drives all sectors of the digital economy. So I would love to talk to all of you about how you're leveraging FinTech and how you're building really exciting health tech companies in Africa. So I'll just go to each of you guys, and if you can just introduce yourself and your company and what you're doing, and then we'll kick off the questions. So I'm going to go to Matilda first.
Great. Hi, Barbara, and thanks everyone for having me. My name is Matilda. I'm the Deputy CEO of a company called Bima. And Bima is a digital health and insurance provider in 9 markets in Africa and Asia. Our digital health products include things like 24/7 teledoctor or telemedicine services, access to specialists, STEM health programs for preventative or chronic illnesses, SMS prescriptions, lab and pharmacy discounts, etc. And we also have a hospital insurance that goes off the back of that. And we sell these products directly to the consumer and use mobile money, prepaid airtime, postpaid, or banks as payment channels that customers use to pay a monthly subscription fee for our services. We've got over 2 million digital health customers today, and utilization rates as high as 15% on our services. That's a bit about me and my company. Thanks, Barbara. We can't hear you now. I think you're on mute.
Oh, thank you. Tito, let's go over to you.
Great. Well, thank you so much for having me. My name is Tito Ovia. I'm one of the co-founders of Helium Health, also the head of public sector growth. Helium Health is a healthcare technology company based in Lagos, Nigeria, and our mission is to accelerate Africa's transition and its healthcare sector using data and technology. We have a plethora of products that sort of form the backbone of healthcare infrastructure, such as our electronic medical records platform, our patient portal, our telemedicine, and most recently launched our Helium Credit product, which I'll be really focusing on today. And that's where we actually provide loans to hospitals, and we get that data through information they have while using our EMR to be able to help and scale, allow them help and scale and grow. And we can be able to give these loans within, 24 hours. So it's a lot quicker. We're across 3 countries, Nigeria, Ghana, and Liberia. We have over 400 actually signed facilities using our products, and over 170,000, medical professionals actually registered. Actually 170,000 patients that are actually using these visits on these products monthly. So yeah, that's a little bit about Helium Health.
Excellent. Dr. Elvis, you want to go next?
Hi, good afternoon. I'm Dr. Elvis Kumar Forsen, and I lead Service Hub Limited. The product that we've developed that we are most known for is Trimester Save, which has actually come into a spin-off right now. Trimester Save is concerned with getting pregnant and expectant mothers to save incrementally towards birth. It's a digital finance solution with a digital health, integrated service. And the goal here is to make sure that the mothers have the digital financial services they need in order to purchase digital health service products and to be prepared at the time that their babies are born with monies in the bank. We are working currently with the EcoBank groups and Pan-African Savings and Loans in Ghana. And we've recently also signed up the largest network of rural community banks there are about 700 branches in Ghana as well. And so that's basically about Trimester Save.
Hi everyone.
Perfect.
Me apologize. The network has been very, very spotty.
No worries. Why don't you introduce yourself since you just come on?
I only heard one person's introduction. I'm a Passion Charnet, the founder and CEO of Orbit Health, which is a digital health technology company currently stationed in Ethiopia, Addis Ababa, and also have a base in the US. Primarily, we focus on what we call both care delivery influencers, which is the government and the private sector. So we have clients from both spectrums of care delivery, but our two major emphasis is improving access and then of course ultimately the care outcome, which is quality. So we have different digital platforms to support our vision and mission. I apologize once again. In Ethiopia, the current network, we've gone through some tough times right now, so be patient with me.
No worries. Greg, why don't you introduce yourself?
Hi everyone, my name is Greg. I lead product and growth at Wella Health. At Wella Health, we use digital pathways to deliver healthcare across Nigeria. Our main focuses include a microinsurance scheme for basic healthcare, the hospital plan, and we also run a prescription fulfillment engine, as well as some other patient management systems for pharmacies on our network. So the idea is to grow our network for pharmacies to ensure that patients are able to get their medications at places they can trust, around the neighborhoods where they live or work.
Great. So you guys, it's a great panel construction here because you guys are sort of playing in different parts of the healthcare value chain. So I'm really interested to know in your space, what are some of the new innovative trends that you see will sort of drive the growth of your space? And how is COVID affecting, the digitalization efforts that you're making in your space? Matilda, why don't you start?
Sure. So first of all, in response to the COVID question, I think most of the people on the panel will agree that COVID has resulted in a surge in utilization of remote health and telemedicine services. So we absolutely have seen a doubling of the usage on our platforms. And I think that's going to serve to accelerate adoption of our services going forward. Because I think what's interesting is that customers who might have been skeptical before and not trusting a doctor on the end of a phone now will be much more used to that and actually welcome the ability to be both safe and potentially discreet and confidential in the way that they have conversations. In terms of what's innovative and new, I think just relating to fintech and financial services, something that's interesting that we're working on, and I think Tito had an interesting example of how you can combine health and financial services. We're working on we have launched what we call a health wallet. So customers who pay for an insurance product can put some of that premium aside to go to pay for medications or lab tests or pharmacy kind of purchases that they make. And so you can effectively have this sort of hybrid between an insurance and a health product that sits sort of like a financial service for people to be able to use. And that's one of the things that's interesting that's coming out of some of the things we're doing.
Tito, why don't you talk about the same sort of trends and COVID efforts and COVID impact on your space?
Of course. Definitely. So what's quite interesting is that, when, of course, COVID hit, we immediately launched our telemedicine product. It wasn't even meant to launch until about Q4 of the year. But also at the same time as well, we launched our emergency response solution to help with different states around Nigeria deal with their emergency response towards COVID-19 and get the data and information that they need to be more efficient. But more towards sort of the fintech side, sort of hitting on something Matilda actually said, on our EMR, we actually as well have sort of a feature in which you can sort of deposit money, as a patient onto there and keep on actually spending from that, I guess throughout your stay, whether it's throughout a year, 2 years or whatever, but that money sort of stays on your account and it's accounted for, almost like sort of a pseudo wallet, so to speak. But when I said I would focus on Helium Credit, we really decided to launch that product because we saw that with COVID, actually a lot of hospitals unfortunately shut down in Nigeria because they knew that they did not have the capacity or the ability to be able to deal with if they had an outbreak, unfortunately, in their facilities, which is really sad. And at the same time as well, we saw the need because our healthcare sector is one that is always seen as a social service, so to speak. So a lot of the financial sector and banking sector don't actually understand what goes on in healthcare because there is no accurate data or anything like that for them to be able to give loans. So we've sort of done something very unique in that our facilities that are signed up and are using our EMRs are actually eligible to loans that we can give them. And it's just so much better because, for example, what we would typically have would be a hospital that wants to get a mammogram, let's say. However, though, they don't know what the the gender distribution is in their facility. If the majority of your patients are men, then you might not necessarily need a mammogram, and that's not necessarily the equipment to invest in. However, though, might be another equipment that you might need to invest in. So post-COVID, to be able to get our dwindling facilities anyway back onto their feet and be able to support our health sector, we've seen that Helium Credit is something that literally all of them have been signing up for and they're rushing for, just because it's so important to be able to even revive that healthcare sector. And I think we're in such a unique position to be able to help them with that. So yeah, it's exciting times, but yeah, I guess COVID had to happen for there to be a need, real need for this product, so to speak, like that. Yeah.
Definitely. And I'm going to ask another question. I'll come back to you guys to drill down on the health wallet and the Helium Credit around how you're implementing it with the financial services industry. But let's go down to Pazion with that same question around the trends and COVID impact.
Yeah. So I think what COVID has done is, aside from what my other panelists highlighted, it just sort of revealed how fragmented the care delivery framework is. And we were sourced by WHO. We're consulting the government on the COVID lab data management. So the major hurdle the country was facing is the testing is happening, sample collection, and then it would take literally 3-4 days to get back with results, especially early on. That was very, very critical because many things were unknown. So what we've done is what we called the health data mapping and understanding friction points while the data is flowing from patient to facility, from facility to lab, from lab to back to the patient, and then either the surveillance or case management's taken over to make sure that that patient is quarantined or controlled. So from that, I think the major lesson learned for us is not just the government care delivery framework that was burdened, but rather the private sector as well were not ready.
I think we lost Pazion. Okay, I'm just going to move on to Dr. Elvis, just to keep things moving. Dr. Elvis, you want to jump in?
And then... so you're talking about the impact of,
No, two parts, not just COVID, but just trends in your industry, innovative trends in your specific space.
Yes, so indeed, for Ghana and the fintech health space, I think the greatest innovations have been in trying to more or less put everybody onto one platform. And the goal for doing this has been so that you could maximize use of limited, specialists, and that has been the driving force for innovation. We've also seen a number of startups come up with imaging studies and AI for identifying, COVID symptoms. And that has been really big in Ghana. But I think that the biggest has been the electronic records systems and getting, hospitals to be able to properly track and follow their patients. That has been innovation space. And although I don't consider Trimester Save to have, achieved very much yet, I think a very interesting point is that those who were saving increased, we had an increase in float by 161% when they saw the threat of probably not having money at the time of delivery. Women who were pregnant moved to save in their Trimester Save, savings program. And so that was quite an interesting observation that was made over the COVID period. But I would certainly give the greatest innovation to the space of electronic records management systems.
Yeah, that's interesting. Greg, what about you?
Thank you. So COVID actually, for us, bettered a brand new line of product, which is the fulfillment service that we currently run. Started with about 8 users in April, in the middle of the lockdown in my country, Nigeria. So just before the lockdowns, after the lockdowns were announced, before they came into effect, a lot of people went and stockpiled on medications because, of course, even if your pharmacist is allowed to move around, they can't get transportation to get to the pharmacy to attend to you. So a lot of people did panic buying, and so they had medications at home for every possible thing they could think of and could afford at the time. So of course, claims for insurance claims or micro health claims went down because of course people were not, number one, they'd already made plans to take care of themselves, come what may. Number two, nobody even wanted to go to the hospitals. I mean, even if you called a doctor or you went to a hospital for something like malaria or a fever, if they weren't going to test you for COVID and find out if that was it, you were going to go home. Everyone had to wait, except accidents and such emergencies like that. So claims went down, people weren't moving around, people were interacting with the product. But again, it created a challenge, or a logistical challenge for our partners. They couldn't get medications across to people on the plans. Either they were using telemedicine platforms which they had before COVID, or telemedicine platforms that were born after COVID. You just couldn't get drugs across to people because of the lockdown. So the product was born, and then with 8 users, we got it started. People started picking up medications in pharmacies right there in their neighborhoods, as against waiting for a supply from a central location. And as our last count, we've been able to get successfully drugs into the hands of over 3,000 lives, 3,500 plus lives.
That's great. So you were now starting to do more like delivery of these, right, to get into the hands of the consumers. Oh, Greg, I'm not sure if you're still there. Oh, we lost Greg. Okay, Passion, are you back on?
Yes, I'm back on. Look, I was just thinking when we were talking about HealthTech, one of the major hurdle this part of the world is connection.
Connection, yeah, right.
I'm not even at the facility, and the facilities that we serve, currently we manage over 320,000 medical records, and we actually, our pharmacy system handles over 2 million prescriptions. One of the major hurdles is, it just sounds very little, but connectivity. But that connectivity issue created actually fragmentation. So you know, especially finding the right medicine at the right place, finding the right doctor to be available to provide care. On top of that, COVID was a major burden. So technology.
Interesting. Okay, this is very, very challenging. Passion?
I can maybe pick up on the point he was making here. What's important with making any health services successful in Africa is that you really need the solutions to tackle both the infrastructure, i.e., let's say the physical part of the industry, and technology, right? So it's maybe not like in some other parts of the world where you can take a technology and put it all over an already functioning physical infrastructure. I think what Passion was talking about is that with such a fragmented industry that's all, let's say, paper-based, where the processes themselves may already not be working well, it's not as simple as putting a technology in place and it will solve the problems. You actually need to do a lot of groundwork, putting a lot of physical pieces together, and sometimes even setting up, the logistics of the networks yourselves. Very much like mobile operators had to become electricity providers in order to provide electricity to their base stations, right? I think in much a similar way, what you're seeing is a lot of providers not really able to just service a portion of the industry, then they would only reach a certain scale, but rather people becoming like one-stop shops for their primary health hub, and therefore having to focus everything around driving the majority of that primary health care, and then driving the physical online to offline off of that. But it's really about us having that role in a physical and technology kind of integration.
Yeah, I think it all comes down to infrastructure. There's financial services infrastructure, fintech infrastructure, but then there's also all of these other types of infrastructure that are just as important. I always say that, in Africa, we don't just build houses, we build water systems, electricity systems. We have to build the whole thing because, there's just so much, the voids are just so large. But that's a good point, and maybe we can get into that a little bit more, and also just how are you guys working with the financial services industry, knowing that now you're basically competing in their turf, and I don't look at it necessarily like that, by the way. I do look at a lot of these. The entire digital economy has to start bringing in financial services and creating these fintech infrastructures for their sectors, frankly. It sounds like you guys are creating those infrastructures for your own space. But how are you working with banks, and like implementation-wise, how are you able to do that in terms of like offering stored value, now credit? Like what are some of the challenges and opportunities that you're seeing? Tito, why don't you start?
Yeah.
Tito, you're on mute.
So let me start with opportunities.
Okay.
I've actually unmuted myself. Can you hear me now?
Yeah, you're on.
Okay, great. Sorry, I was just checking. So I would start with opportunities. So some of the opportunities we're seeing, and I sort of touched on this before, is that because it is such a tiring process and it's such a long process getting a loan in Nigeria, whether you're in healthcare, or whether you're in oil and gas, or whether it's telecoms, or whether you're just in agriculture or anything like that, right? It's just a tiring process. We kind of make the joke that they only really give loans to people that have money already. And that's because really in Nigeria, there's no sort of official, credit system or anything like that in place that exists as you would see in possibly other parts of the world. So they sort of do it based on, okay, do you already have money in the first place, or do you have like sort of, tangible properties or things like that we could sell to get this money and for collateral? And again, even still then, interest rates are something like, in the 20% or something like that, or higher, the mid-20s, which is, ridiculous, right, in the first place. and for anybody and for any sector. So something that we offer, of course, is that process is already so much shorter with helium credits. The second thing is that, we're not asking you sort of all these dire questions because we can see what is going on in your facility. We know what's happening. We know, so the data that's coming out, sort of the top medications that are being sold. We know sort of how many staff are using truly using the solution. What are your top diagnoses, things like that. And all that data basically feeds into your quote unquote credit worthiness that we then sort of create for you as Helium Health, for us to be able to give you a loan and sort of decide the interest rate and things like that, and even our interest rates are a lot lower than you would get our, the traditional banks. So, all around, we're actually giving you, sort of a better system, right? For you to be able to, get your loan specifically for healthcare for your facilities. I would say definitely a challenge is that because nobody has done this so far in our market, in our Nigeria market, and because it's still new, and because sort of the word loan, everyone's like, oh, no, they run away, and they think about the process, sort of the negative connotations that come with banks and things like that. We're sort of having to change that behavior and sort of educate people and tell them that, oh no, that this is fine and this is okay. And I think what's really helped us to sort of begin to overcome that sort of mindset is because they're already using our solutions. If it's not our telemedicine solution, they're using our emergency response. If it's not that, it's our EMR. So again, we're already a trusted brand to these healthcare facilities, which allows us to do that. But we definitely do still have to do some behavioral change and some education about how it works. So yeah, but it's going well so far. I think that the banks so far see it as such a small market. Oh, sorry. I was already answering your question before you.
Go ahead. I think
so far it's quite interesting. The banks, I would say, in Nigeria are quite pompous. They're quite pompous in the sense that, they don't, I guess, see what we're doing as a threat or anything like that, or even as sort of a problem. And sort of how, I guess, we work with them. I mean, it's really not even the financial institutions themselves, but it's really more about verifying that these companies are actually registered through their right documents, doing sort of our own KYC on the facilities and we already have, again, a lot of this information because we have contracts with them that are still standing that we had to check out. We already know, the MDs, but just doing our own sort of KYC background checks on them as well, to just be doubly sure. But really, there's no sort of, I would say, hurdle that we sort of faced so far. But I guess because we're not seen as a threat yet, I mean, maybe ask me in about 2 years' time.
Yeah. Well, are you getting capital from the banks? Like, how are you funding your debt book?
Okay, so yes, so definitely, I think, again, benefit of COVID, the Central Bank of Nigeria actually came out with, these, loans and everything like that are very, very affordable, interest rates. So we've been able to get sort of some funding from there and accessing that capital to then be able to go on and then, loan that out as well. So yeah.
Yeah, that's excellent. That's excellent. Let me just see if Passion is still on.
Yes, I'm here. I'm here. Can you hear me?
Passion, we didn't follow through on your train of thoughts. I just want to make sure you have the opportunity to do that.
Yeah. Sure. So even if I kind of touched on the infrastructure, but the fragmentation within the care delivery framework, obviously there's a need when we are talking about sick care or someone's sick and they would like to get medical attention in a timely manner, and then they will be able to afford to pay for it. And they probably would get a better quality care outcome that has continuity embedded within it. That's sort of measurable. Now, of course, where the financial component comes in, I mean, I really appreciate what Tito has described in being able to provide access to care, which is something that I think every country is struggling. So our sort of solution, what we call this hybrid payment framework, is we kind of build what we call the Orbit wallet that allows not only the those people that are paying out of their pocket, but also those people that are actually getting subsidized care from the government will be able to have a clear understanding of how their money is spent into this care delivery framework. Of course, there are several hurdles that currently we are still working out in how do you, without becoming a financial institute or a microfinance institute, can you actually manage the sort of handling money in such a way that you are allowing loaning and whatnot. For that, there isn't a clear roadmap, but we are in conversation with some banks and insurance agencies so that from our end, every care package, regardless of how it's structured, it has to be linked to a financial process. For example, if someone is trying to get medication, diabetics, every care is quantified and articulated in such a way that every activity has some billing code that's linked to normally what we call the claims and then the insurance and what have you. But from veering off from the traditional insurance model, to be able to by creating a streamlined space whereby we have not a perfect solution that is acceptable and legally sort of supported by the directive within the local space. But that is the direction that we are heading to really help patients have access to finance when they need it the most. But at the same time, there is also a clear understanding of the care that they are receiving during the time of but what COVID has brought is it brought a very unique awareness to the entire sort of what we call the stakeholder framework. The government is aware, the private sector is aware, and individual care recipients are aware in a very different fashion. Now, of course, that is sort of opening up doors for tech adoption at the same time. So I feel like we have to juggle a little bit, but I think in the near future, we'll be rolling out some acceptable solutions that's backed by the government as well as the private sector. So currently we are serving both the private sector and the government sector through managing the care framework, the patient in from facility to pharmacy and some of their payment processing. But as I indicated, what Tito has done within the Nigeria framework is something that I think we can learn and see the applicability of it and then influencing some of the policies. But in Africa, you have to also consider the infrastructure. By infrastructure, not the physical infrastructure only, but also policies, governing documents, principles, and then what have you. But I believe we are pressing forward, and I think some tangible products will be available for the public pretty soon.
Great. Dr. Elvis, what about you in terms of partnering or working with financial institutions or in financial services industry? Are there challenges and opportunities in working with these partners and all of that?
Well, I think that for us, the major value add we were bringing into our relationship with the financial institution is actually access to clients. So we have the situation where for a lot of young people, especially young women, their first true prolonged contact with the formal sector is the hospital when they fall pregnant, and you have 9 months of contact time with them before they have their children. And so the value proposition to the financial institution is to have a legitimate channel in having contact with these people. And in Ghana, as in a lot of sub-Saharan African countries, you realize that women start having children at a very young age, especially at the bottom of the pyramid. So then that creates the issue, the opportunity of the lifetime value of the client. So as although the direct financial return on investment cannot be calculated in a year or two, the partnerships that we have found workable have been partnerships where the partners are looking to catch them young, so they will be yours forever, as we say in Ghana. And that has opened a lot of doors. And when COVID struck, of course, the health sector was one sector that has been, always up and going. And so that created an even greater appreciation of what Trimester Save brings to the table. So I wouldn't put it in figures, but I would say, qualitatively, it has created a true defense for our value add that we bring to the table, and it's been good in that sense. And we were happy that the most leading partner, Pan-African from EcoBank, reported 161% increase in deposits, when in fact their general savings dropped because people were withdrawing. The portfolio for Trimester Save rather increased 161% because we then coined the word insurance savings. They are saving to ensure their future. So I think that by that, I would say for us, our relationship has really improved with the financial sector.
Got it. I'm going to jump into questions from our Q&A chat as well. So to make this more lively, I have a question that talks about insurance. Maybe Matilda, you can touch on it, on others who are working with insurance players. What role can insurance play in enabling quality and affordable care, as well as ensuring flow of funds to hospital? Have you seen any sort of change in dynamics around insurance, especially during COVID? And then also, how are we reducing the cost of healthcare in general?
Yeah, I think with respect to insurance, I think it's always been difficult to have that direct link for a cashless health insurance policy that we might be used to in other continents, purely because of the fragmentation that we've talked about, and for many other reasons. I think BIMA's hospital cash insurance is rather one that reimburses customers for the expenses that they pay themselves when they go to a health facility. So rather than us having links directly with hospitals or clinics, this was the most efficient way and cost-effective way for us to standardize a product. And that hasn't changed. I think in other regions, so in Indonesia, we have been able to, for example, make this health wallet concept something that's cashless. And that's where we find this exciting, where we can take a bit more control over how we enable payments for things like medications or for lab tests or clinic appointments. If we have that wallet that we can then control through a teledoctor consultation, for example, and then that goes, a teledoctor consultation would then be the driver of somebody attending an appointment, paying for a test or whatever it is, and then they can take the money from that wallet. And that is a pseudo insurance product, really. It's sort of putting aside premium for expenses related to health services. And that, with the power of mobile money, that's it's expanding rapidly in all markets across Africa. You're actually able to make it almost cashless, where you can send the money to the person's mobile money account before they have to make the payment. So again, as I was talking about, a lot of this is about the infrastructure not being there and you having to build it yourself from scratch and finding innovative ways to do that.
Mm-hmm. And Tito, anything in your industry that has helped reduce the cost of healthcare? Any trends that have helped? I know you mentioned the loan dynamics, how hospitals are getting cheaper loans, but how does this affect the consumer in terms of cost of healthcare?
So how it affects the consumer is that they're able to provide things on volume, right? So what I mean by that is that, certain hospitals that, again, wouldn't necessarily be getting equipment or, getting drugs or things like that are widely needed, sort of, I guess, I would say revenue that's quite literally walking out the door, right? They're able to see that, sort of invest in that, and then be able to, provide cheaper drugs at a lower cost because of the data and information that they have. So we've seen it several times. I'll give an example. At one of the facilities that we have, and it's a pediatric center, a lot of the majority of their revenue were actually coming in through women between the ages of 18 to about 35. And these were actually the nannies of the children that were coming in and doing tests in the lab. So we saw that this facility was able to actually reduce, instead of saying, okay, do you know what, let's do the individual, labs and things, like bundle it as sort of a nanny wellness test or something like that, lower the cost and actually sort of drive more value for more people to go in. So doing things like that and sort of then advertising it, the hospital themselves is sort of placing themselves as, oh, we do these sort of quote unquote packages and things like that. And the consumer too is happy because they know exactly what they're getting and the value that they're deriving. So things like that, I guess with our data and information that we see can help them, I guess, lower the cost of care, which is really expensive in the private sector, very, very expensive in Nigeria. So yeah.
I think there's also, just to fill in, I mean, telemedicine itself costs, from our products, for example, that cost between $1 and $3 a month, is much lower than potentially some primary care kind of clinics or OPD that you might pay for. Also, you have to talk about opportunity cost, right? Getting to an appointment, getting access to a doctor quickly. Being able to basically speak to somebody without having to travel or leave your workplace or whatever it is. All of those things make telemedicine or remote medicine, digital medicine, very, very attractive for people.
Yeah, and we just got a question in that says a startup he developed a startup that does conversational AI to enable virtual agents to speak to people in rural communities. So that we can reduce, I guess, the amount of people going into hospitals, right, and reduce the cost of care. So that's leveraging telemedicine essentially. Where do you guys all see regulations or government intervention? Maybe Passion, you can talk about this in terms of telemedicine and now leveraging data that all of you guys are essentially creating in the industry. How do you see government and regulations playing a role in all of this? Passion, maybe you can comment because you work a lot with the public sector. Okay, maybe Passion is not on. Dr. Elvis, do you want to comment on this?
I'm sorry, can you hear me okay? No.
Okay, now we can hear you, Passion.
Yeah, sure.
Okay,
so I Trimester Save. Okay.
Okay, go ahead. That's fine. Go ahead, doctor.
All right. Yeah, so the public sector, when it comes to health, at least in Ghana, manages about 70 to 80%. That we recognize as the masses. Now, obviously that doesn't mean they are managing 70 to 80% of the funding that goes to healthcare, because the private sector, charges more and so forth and so on. But with regards to the numbers, the public sector, produces, a lot of cover or has a lot of coverage. And so it's very important that they are roped in these developments. And so I see that, like for us at Trimester Save, the Ghana Health Service didn't offer us any money, but just when the COVID broke, they kind of rallied and gave us access so that now we are able to target 200,000 women in all their health facilities. And this is our target, because the actual addressable market there is 1 million. And so I think that from the little things of removing bureaucratic barriers to actually having access to your clientele base, to the big things of regulation, you have a very big role that government agencies can play. And I think that at least in Ghana, everybody knows that innovation goes ahead of regulation. And so what governments can do, as I see happening even with us here in Ghana, is to partner to roll out innovative products, because even the regulators, which are also government agencies, tend to feel safer when they find government partnerships in projects that are running in the innovative space or at the innovative stage. And to me, that has been the biggest thing. And I do get even competitors try to get through to Ghana Health Service through me, and because they've seen the kind of mileage that Ghana Health Service can give. So even access is a big problem. Access to your market, especially in the health space, is a big problem. And so I think government should be able to offer that to health tech startups that are working in the space. And then there's also the issue of financing. Government can make financing available through pools or funds that they set up. Like in Ghana, we have the Ghana Investment Promotion Center, and then we have the Ghana Tech Lab, also the Accra Digital Center, that the government channels funds into to make available to support the startup ecosystem, and of which health is also a prominent part now. So those would be my thoughts on how governments can help.
That's very helpful. And I think the more the governments start focusing on the digital economy, the more these health tech startups can start leveraging a lot of the infrastructure that the government puts in place, whether it's the connections or it's the financing, or it's giving broad access to all these telemedicine opportunities. I wanted to just switch gears for a second and just talk about how you guys are building your companies in terms of growth opportunities. We've talked a lot about how you're leveraging fintech, financial services. How are you scaling into different markets? Tito, and you're in 3 countries. Greg, I think you're in Nigeria. Matilda, you're in multiple countries. Are you seeing a sort of an aggregator play here, where you're working with hospitals, healthcare providers, pharmacies, insurance players? Are you seeing any aggregation as you're scaling into these different markets, or are you? What is sort of the way you're approaching scale? Why don't
I can? Yeah, go ahead. I can.
Cassian, why don't you talk? Because I know you kind of dropped off.
I've been in and out, and I think it's unusually it's been very difficult these last few days. But so for example, this Take Emerge program that we're selected to be a part of, it's just opening up doors for us to scale beyond Ethiopia. So right now we are in conversation with several facilities in Kenya and also Uganda. So what the Take Emerge program, the IFC program, does is whenever there's a need in collaboration or partnership with the actual care providers, be it lab framework or hospitals or clinics, if there is a technology solution that aligns to help them accelerate what they do or solve some major challenge, so there's that collaborative opportunity. And so what that conversation is doing to us is the alignment, the collaboration goes beyond your local ecosystem, so to speak. The limitation, the barriers, all of a sudden will have a different look when you go to one country beyond your country border. So, for example, Kenya has a better connectivity, sort of better tech adoption or what have you. But that doesn't mean some of that capability cannot be leveraged in Ethiopia. It's just a huge country. But what we are thinking is scaling is not linear, meaning that let me just first address all the need within Ethiopia, and then those needs are met. Now I can look into other countries versus what are my strengths, what are the things that I'm doing best or better, and then how can I actually be of service to either local clienteles, or by way of making my solutions and value available beyond the border. So I'm grateful that we're part of this Take Emerge program, just sort of opening up doors for us. But the other thing that we're doing is proactively, what are the other needs that are not met, or what are the other needs that are met in a sort of minimum manner, and then how can we actually get in and help those care delivery facilities or other partners to actually accelerate what we do or expand what we do. And I don't believe there is, in the past, it used to be you are a tech company, a health tech company, stay in your lane, versus now we're talking about fintech and health, or fintech for health, which means how do we tackle some of the barriers and challenges of accessing to finance to be able to care, to be able to access quality care in an affordable manner. So we are leveraging this, but beyond that, we are also actually building what we call beyond border partner alignment. So we're in conversation with some countries in West Africa and in South Africa. So there, I see possibility in and reaching out and learning from other successful sort of trends and patterns, instead of us just looking into this orbit thing. Let's just go by ourselves. So I think being cross sectional in what we do, and also really focusing on the strengths that we have, I think we can do a lot of good. That's what we learned so far.
Makes sense. So anything else from, Matilda, Tito, any one of you guys want to talk about anything unique in how you're approaching scale, if you're aggregating the market?
I agree with a lot of what Passion said, and Tito especially, and the fact that sometimes we just need government to remove one or two encumbrances here and there, and things get better. But in this part of the world, to scale or to play, like Passion said, not linearly, like you have to realize that, oh, this will be good, this will create value for my users, this will create value in the ecosystem. It's almost like you need to own the whole value chain. And before you know what's happening, you have this license and you need that license and this. So you're like everywhere, you're doing everything just to ensure that, the value chain is robust and quick and doesn't break, often. And then you begin to look at simple things in this part of the world, like how do I collect money from everyone? So things like that, collection. Okay, so if I were able to, like right now, we're talking to some banks about inventory financing for our pharmacies. If I'm able to raise that fund, okay, central bank has stepped in with some healthcare line of credit. We get that through a bank, and then we sort it around for the pharmacies that will be able to increase their business and their efficiency in the neighborhoods where they serve, all of that stuff. And before you realize it, you are playing in so many markets because you end up having to solve every problem for yourself.
Absolutely. That's helpful, Greg.
Yeah, I can just add our number one kind of thing that enables scale is a mature payment channel market. And that, for example, is mobile money, right? Not only penetration of accounts, but adoption of mobile money accounts enables us to reach the end consumer, and for the end consumer to pay consistently. So to pay on a monthly basis, on an ongoing basis for their services. That's absolutely the number one thing that enables us to enter market and to scale effectively. And so there's actually only a handful of markets in Africa, actually in the world, where mobile money penetration and adoption is sufficiently high that you can walk up to almost anyone on the street and they'll have a mobile money account and it'll have some money in it. And that's what's absolutely key for us. With, we have almost 300 sales agents in the field in Ghana. We have 200 in call centers, and that's what's absolutely key to make it work. Then when it comes to how we set up the health component side, we do everything from scratch ourselves. So we hire doctors locally, obviously, but hire them in-house, set up partnerships with insurers, with labs, and pharmacies and drug delivery companies. And regulation is really a hygiene factor. And it being so nascent right now, there's really a lack of clarity on which regulatory body or board actually governs digital health and telemedicine. Because, for example, you might have a regulatory board which governs facilities and how physical facilities should look. You may have those which govern medical practices and processes. And then you might have a national health service, which actually covers both the insurance space or also provision of health services to the basic public. And there's not one of those 3 or 4 parties that actually feels ownership over the digital health space. In fact, it's all of them working together. But I find that generally there is an openness to allowing innovation, as Dr. Elvis said, allowing innovation first, as long as they're aware of it, and then evaluating and coming up with regulations later. I think something that happened in India, and I think 2 months after COVID kicked off, probably in May or June this year, India rolled out a telemedicine regulation specifically to digital health and to manage this. No markets in Africa, from my awareness, have rolled out a comprehensive telemedicine strategy regulation. But so it may be coming, but I think quite thankfully the regulators are starting to understand what's happening and not putting regulations out before they understand things.
Yeah, makes sense. And even if they did roll out something like that, they'll still need to leverage existing players that are already in front of the consumer, like you guys. What about you, Tito, to end the session?
Thanks. So I'll just say about scale. So far, we're only doing helium credit right now in Nigeria, because of course to really test the waters and understand what we can go into. Because I think that, I mean, I think I know that every single country in Africa, it's a completely different ball game, especially when you're looking at, fintech and healthcare and things like that. However, with our EMR solutions and being in Ghana and Liberia, I mean, the processes of hospitals are, they're basically the same anywhere you go in the world, to be very honest. It's really a plug and play thing. What really sort of drives us and what's different is sort of, I guess, your approach to pitching, or maybe your approach to pricing and things like that, and sort of emphasizing, what are sort of the pain points, because different pain points are different things in different markets, and what you can then emphasize with your products that would really then help to, I guess, make that sale and get your products through the door. I guess, being an EMR company first, and that being our first product that we launch, we sort of walk and deal with every single, healthcare stakeholder. So whether it's on the patient's end, whether it's the pharmacy, the lab, the doctors themselves, the nurses. So I guess us scaling and providing, loans to pharmacies and diagnostic centers really wasn't that much of a challenge anyway, because we already understood their processes and their procedures just by them being our clients in the first place. So we haven't seen that big of a leap. I think that where we'll see so much change and things like that has to do with regulations when we want to scale outside of Nigeria with helium credit. But yeah.
Got it. That's excellent. You guys had I love all your comments on this session. I think we have to go now, but it was great meeting you, and I hope you guys do continue to do really well with your businesses, and I'd love to keep in touch. Thank you.
Thank you so much. Thank you.
All right. Thanks. Bye.